What's up, guys? How you guys doing? Hope you guys are doing fantastic. So this is a second video of the Price Action Academy. So what we're going to be getting into today is candlesticks and time frames. This is a fairly simple topic. Like, this is just the basics, guys. So if you guys are already like into day trading and you guys already know what candlesticks are and time frames, I'm just going to go over the basics, you know what I'm saying? So just if you already know what these concepts are, then yeah, you could just skip this video because it won't help you too much. If you're new and you're a beginner trader, then this video would definitely help you out. I'll try and break it down into detail, as much detail as possible, because it's true. Like, I'm a new teacher, right? So it's hard for me to break it down into detail when I really have never really like talked about it to myself, like how a candlestick works, like where the open is, and just like how to explain it, right? I just do it. I'm a day trader. I just do it. I just trade. I don't really like teach it, right? So this is a new thing to me. So give me a little bit of a break here, but I'll do my best, and hopefully it turns out well. Hopefully I don't make any mistakes, because I could see myself making mistakes here, because I like I said, I've never taught, so I could just see myself like, because when you trade subconsciously mostly. So like, you just put out a bunch of lines. You just know how things work, and obviously you can't calculate how all the things, all the concepts, all like the time frames, how they're all correlating together. It's usually your subconscious mind that does that. So it's gonna be a challenging one teaching you guys this, but I'm definitely in for the challenge. So let's get into it. So we'll start off with the candlesticks, right? So basically, we'll do it on the weekly because it's clear, or I could draw them out. I feel like drawing them out would be quite beneficial, because it's just, I could draw it out and it'll be super clean. So here, we'll just do that really quick. Alright, so when we're talking about candlesticks, basically in the market, so candlesticks are super straightforward. There's two types of them when you get right down to it. So on the left here is a bullish one, the green. Usually they're in green. And the red ones are bearish candlesticks, and usually they're in red. But as you can see on my chart, I have them in black because I switched them just because it might have a psychological factor in my mind. So I think that might be beneficial for you guys as well, to maybe change your red ones to black, because red usually triggers in the mind something negative. So if you're going long, for example, and you see a lot of red candlesticks, I don't know. It just seems beneficial, right? And it looks cool. Black looks cool, so why not, right? So, you know. So yeah, this is basically just your average candlestick. Of course, it could look like this, or like this, where it literally opens and closes in the same area with two wicks. It could literally look like that, right? There's multiple formations. I just drew out the most, I guess you could say, average ones or normal ones. As you see, they're all relatively the same, like this one. Some of them are like this without any bodies. Some of their bodies are skinny, but mostly they're big with little wicks. This one has barely any wicks, but with a big. This one has barely any wicks with a big body, so this one's a bit odd too. So it's a strong bullish sign. So yeah, all these candlesticks basically tell you like a little story, but I don't really, to be honest, guys, I don't really play off of that too much. I just look at what do these higher time frame candlesticks look like on lower time frames, so I can get precision entries. I don't really look like, oh, this is a rejection candlestick. Yeah, I do sometimes, but to be honest, that's about it. It's a rejection candle. That's it. I don't look at dojis and whatever, like extra like candlestick patterns. I don't do that stuff. I'm not a candlestick pattern trader, you know what I'm saying? So let's get, okay, so basically when the candlestick, for example, opens up, and let's say, for just super simple, let's say you're on a 1 minute chart. I'll write it down. Just so I want to make it as simple as possible. I want you guys to understand how the markets work and how candlesticks form, and what it's from 0 to 100, A to Z, everything. So I'm gonna make sure I explain everything. And if maybe I missed something or you guys didn't understand something, please comment below and just ask. really just ask. I'll either make a video on it if it's essential, or I'll just answer your question in the comments section, right? So let's say this is a 1 minute candlestick, right? So this candlestick is essentially 1 minute of price action of the market that you're basically watching, right? So when this candlestick essentially forms, let's say this candlestick is already formed, right? So we have another one forming. Where do you think it would form? Well, we have the open here. So the candlestick opens here. And then we have the close here, right? So the next candlestick would form right here, the body. Why the body? Because that's where the open is. Right there. And now, depending on if it goes down, it'll be red, or it goes up, it'll be green. So let's say it goes up. Right? So it goes up. It's essentially, overall, it's going to be a bullish candle, but I don't feel like switching it back and forth. So let's say it goes down a little bit, you know? Goes down. Let's say this is a 1 minute candlestick, you know? It's bobbing a little bit. This is price, right? So look over here. This is literally price of the market that you're watching. It's going up and down in this 1 minute time frame. Of course, it's not going to go that fast, but just imagine, right? So it comes down, and starts forming bullish now. So there we go. What do you think it would look like with the wicks? I think we came down like this far. Something like that. So that's exactly what it would look like, guys. I know the bodies are a little bit off. Like, it would be like something like this. Something more like that. But sometimes there are gaps, guys. Don't forget that. That'll be in future videos. But, yeah. So we have the low of the candlestick. You have the high of the candlestick. Basically, the low is where the market that you're watching went in that 1 minute time frame. And the high is where that market went in that 1 minute, not time frame, I guess you could say time span, which would be a better word. The open right there. And we have the close. And now, why not? Let's do one more example here, but a different scenario. So we'll do a bearish candlestick. So I'll move this aside here. And then we'll move on to the bearish scenarios. But I won't do all this scenario candlestick formation type of thing practice, because it's essentially the same thing. It's just the bearish version. It's very simple. You'll see it here all the time. It's just reverse it. Do you see the bullish ones that I just taught you? Just do it with the bearish ones. Super simple, guys. It's really not like rocket science. So we'll just do a little bearish example here. So the candlestick opens here. So it goes up a little bit. Remember, this is the 1 minute time frame, guys. 1 minute time frame. So it goes up, bobs up, sweeps this high, goes above this high of this candlestick. So it's going lower and takes the low. And closes back in. So it'll be something like this. So this is what I would refer to as a rejection candlestick, I guess you could say. I just use it as confirmation, guys. I don't use this as some sort of entry or something like that. I just use this as confirmation that we're going to head in a certain direction, or we're respecting certain price levels. This isn't something where I see this and I'm like, okay, I'm going to get in the market. That's not the case, guys. So let's move on. So let's go to the bearish example here. So actually, I'll keep it up on the chart here, just so you guys will maybe want to look at this while I mark this bearish candlestick out. So yeah, it's basically the same thing. We have the open here, not here. Why? Because the open of the bearish candlestick is here. So for example, it looks something like this. We'd go like this in the 1 minute time frame, right guys? Do something like this. And remember, when we're bobbing up like this candlestick would be green. It's just I'm not gonna change it. Do something like this, and then it would close here. So this is the close, open, high, low. Very simple. High and low are the same, regardless. High and low. Well, of course, low is not gonna be here. High and low is the same, right, guys? Open and close are different, though. It's just the opposite of the bullish candlestick, right? So it's fairly simple here. I'll mark them out here just so you guys aren't confused. Maybe you guys want to take a screenshot, study that, and put it on the charts and see how the other candlesticks formed with each other, just because it's a bunch of back and forth. So it's a good studying, it's a good way to study if you guys want to do that. Yeah, there you go, guys. So if you guys want to screenshot this, go right ahead, and we'll get on to the next topic. So basically, well, first of all, before we go to the next topic, I want to see if there's anything else that we can do with this. I think that's pretty much it for candlesticks. It's fairly simple, but yeah, guys, like this is pretty much it. Like for candlesticks alone, this is pretty much it. There's no strategy behind it. It's just how a candlestick forms. It's different for every time frame. Of course, 1 minute's super basic, but you got the 15 minutes, you got the 5 minutes, you got the 1 hour, the 4 hour daily. There's a bunch of time frames, right? And basically all these time frames are essentially is, if you're on the daily, the candlestick is a daily candlestick, which means that the candlestick will open at a certain time. So for the daily candlestick, it would close at 4:14 and then open the next day at 6. And for that day, it would close at 4:14. So that would be one whole day. For example, if this wasn't a 1 minute time frame, if this was a daily time frame, this candlestick would represent a day's worth of price action in whatever market you're participating in. So let's move on to time frames. So basically, all we're gonna do here is essentially look at higher time frame candlesticks and see how lower time frames essentially create candlesticks in the higher time frames. So we'll basically mark out the candlestick, this candlestick right here on the weekly, and essentially see how lower time frames mask this higher time frame candlestick, just to get a feel for the time frames. Nothing too complicated, just to see how these lower time frames and higher time frames correlates. So you see straight up little rejection here to the downside coming off of this open here, straight up into this wick, and we got the high, we got the open. I'm gonna mark out the open. Yeah, so we have the close. I'll mark all of these out. All right, now let's go to lower time frames and just see here. So basically the high of the week, of last week, was made on Friday, and we also had the close here that was on Friday, of course, right guys? Last day of the week is Friday, so we do have the close on Friday. And so the low of the week was on Wednesday, right there, as you guys could see, Wednesday, April 30th, and the open was on Monday on this little bearish candlestick here. Opens at the top, right guys? As you guys can see, this is literally a weekly profile here. This right here, these 1, 2, 3, 4, 5 candlesticks right there. So let's go down to a 4 hour here. So guys, here I literally see the profile itself, and I want to tell you guys it, but it's too advanced. It's too advanced, and it's just not right for this discussion. So it would definitely come in further discussions, but with this YouTube video, it just wouldn't seem right. So we're just gonna keep it simple and straightforward. So basically we had the open here on Sunday at 6 p.m. like I mentioned. The days open at 6 and they close at 4:14. It's different for Sunday because right away at midnight it'll switch to Monday. So it's a bit different for Sundays as they last for only like 6 hours, I think, or something like that. Yeah, 6 hours. But yeah, so we did the open here, came down, swept these lows, came up, just a little bit of back and forth. We call this back and forth consolidation, right? Just back and forth, nothing really interesting. Massive candlestick to the downside. And look, just a little insight, right? We're bullish, right? We're going up. Massive candlestick to the downside, indicating massive bearish strength, but in this massive bull market, right? So then the sellers are met with instant buying pressure, right? And remember, this is just a weekly candlestick, but we're just down on lower time frames, right? We're on the 4-hour right now. Massive gap here, retracement, and we headed on up for the close on the week. Let's go down even more. As you see, the consolidation is now more pronounced, and the drop lower is split up a little bit here, and you can see the gaps. Not much to talk about here. We did have consolidation at the top. We had expansion, consolidation, expansion again for the weekly close. Yeah, it's really, you guys could just backtest this on your own, really. Just mark out higher time frame candlesticks and just see how the lower time frame candlesticks move in the higher time frame candlesticks, and just see how they create narratives and just create structure and basically movement in the markets, right? So just study that, backtest that, and yeah, study for the next video. Next video we have trends and highs and lows, so I'll be teaching you how to identify a trend and how to play off of the highs and lows of the trend, right? It's not support and resistance, guys, so it's a little bit special there. This video is definitely different from the normal retail trader perspective videos, so yeah, it's definitely going to be a good one, so definitely tune in for that one. But this is going to be it for this video. I'll see you next time. Peace.